Today, I want to talk about a stock that's been all over FinTwit. They're called Hypercharge. Full disclosure, I don't own any shares. I'm not connected to this company. I'm not short. I have no affiliation. This charging station distributor has been making waves with Canadian and American retail investors, with its stock soaring a jaw-dropping 800% in the last week alone. In today's video, we will take a look at Hypercharge. We'll be tackling the recent share price, the company's business model, which we find somewhat elusive. We're going to dive into the company's 4 recent deals, take a look at their share structure and financials, and we're also going to explore the possibility of shorts getting roasted here. Let's dive in. First, I want to talk about the stock move. Picture this: Hypercharge's stock lying dormant like a bear in hibernation since its public debut in late November. Suddenly, it wakes up and decides to throw a party. And not just any party, we're talking a Wall Street rager that'd make the wolf himself green with envy.
The only problem you're gonna have is that you didn't buy more.
On March 31st, the stock was modestly hanging out at a cool 46 cents. Fast forward a few weeks and it's living the high life at a staggering $6. Now, what's the secret sauce behind this massive volume and huge rise in share price? Well, Hypercharge has been playing the social media game like a pro. They've got YouTubers and TikTokers name dropping the company left and right. Couple that with a few intriguing news releases, and you got yourself a recipe for a stock market frenzy. On April 10th alone, Hypercharge traded a mind-boggling 14 million shares worth just under $55 million. That's enough to make an 80 stockbroker weak in the knees. Next, I want to talk about the business model. The company uses all kinds of buzzwords and adjectives to describe what they do on their deck, from helping partners grow their business to speeding up the transition to a carbon-neutral future. But here's the rub. While Hypercharge claims to offer these fantastic charging solutions, it's a tad unclear if they actually manufacture the units themselves. Contrary to what many of the YouTubers are saying, their filings state they purchased the chargers from a company called Oasis Charger. So from my point of view, it reads like this company is really just a distributor of electric charging equipment that offers various purchasing options, including direct purchase, leasing options, and the trendy charging as a service model, also known as CaaS. Now, as the company scales up, it could get interesting. They will likely offer meaningful subscription programs and big data that could turn into nice high margin revenue. Now, the operative word there is could. This is risk capital where very few companies manage to execute. That being said, management's off to a solid start. In 2022, Hypercharge sold just under 1,500 ports, delivered 500, activated 23 partnerships, expanded to 8 provinces in 8 states, and raked in a cool $1.7 million in revenue. They've set their sights even higher for 2023, aiming to double the number of chargers sold, and are guiding their revenue to between $5 to $7 million. The company points to a $13 million sales pipeline that they expect is just growing based on a forecast predicting 932% growth in EV charger installations by 2027. Let's talk about the 4 recent deals the company signed. Unfortunately, they leave us guessing on all the deals about the money involved. It all started on March 28th when they inked an agreement with Czech Media Group to provide 6 Level 2 chargers. Just a day later, on March 29th, Hypercharge announced a whopper of an agreement with King George Hub to supply a staggering 748 Level 2 chargers. These are scheduled for delivery in early 2025 for a 2 million square foot mixed-use facility where the chargers are going to be available at every parking stall in the complex. Then on March 31st, Hypercharge announced that they're going to provide 128 Level 2 chargers to Lark Group of companies for a city center development in Surrey, BC. And then lastly, on April 5th, they secured a small agreement with a First Nation band in Alberta. Next, I want to talk about the share structure. According to the company's website, the share structure breaks down as follows. 30 million founder shares were issued, mostly between 2 and 2.5 cents. Now, that includes some advisory shares at 40 cents and some additional shares related to acquisitions. These shares are subject to a 36-month lockup period. Then they did a $2.5 million financing at 25 cents, which created another 10.5 million shares. They did another financing after that for $4 million at 40 cents, which issued another 10.3 million shares. Then they did a $6 million financing at 60 cents for, you guessed it, another 10 million shares. For simplicity, let's ignore the performance-related warrants outstanding, and then we can say as of the year-end 2022, Hypercharge had 61.7 million shares outstanding, which they had an additional 6.6 million warrants at an average exercise price of 34 cents and 2 million options at an average exercise price at 37 cents. Now, normally we don't get that caught up in warrants and options, but when your stock's trading at $4, $5, $6 and the average exercise price is, 34, 37 cents, well, it becomes meaningful to look at those warrants and options. Taking the lockup period and various financing rounds into account, we find about 24 million shares are currently free trading. This includes 1.5 million shares from the founders round, 2.5 million shares from the 25-cent round, and all of the 10 million shares from the 40-cent round and all the 10 million shares from the 60-cent round. Also, it's important to note that there's going to be more free trading shares starting next month, which is going to add more liquidity to the stock. Next, I want to talk about Hypercharge's financial position. At the end of the year, they had $4 million cash on their balance sheet. Although the company likely used some of that cash since the end of the year, they have announced another $5 million financing at $1.05 per unit, which comes with a half warrant at $1.35. The company's debt is negligible with only $1.1 million in accounts payable. In Q4, Hypercharge reported $1.2 million in top-line revenue, boasting gross margins of around 21%. However, the company's financials are somewhat challenging to decipher at this stage as they spend nearly 3 times more on consultants than they generate in gross profit. Investors are going to want to keep a close eye on the company's operating leverage as they scale up. Hypercharge's deck claims that they expect to double their top-line revenue in 2023, which will provide insight into their operating leverage over the next year. However, it's probably going to take a couple more years of rapid growth before we can actually gauge the company's potential profitability with any accuracy. Currently, the company is losing around $500,000 a month in operating cash flow. Now, with the upcoming financing, the company should be able to have enough cash to last them at least a year. As to be expected, in those financings, a whole boatload of that cash is going to go towards capital expenditures, not operating cash flow. Lastly, I want to talk about the reasons for the share price move. As I said earlier, Hypercharge recently announced a financing at $1.05 per unit, with no hold on shares under the offering. This means that they're free trading. The absence of a hold period might have led some investors to believe that they had allocation and they decided to short the stock. If those investors failed to secure an allocation, they could have been forced to cover their short positions at any price possible, driving the stock price even higher. This phenomenon of short squeezes where the stock price deviates significantly from its fundamentals has been observed in other companies like FaceDrive and Tilray. In these cases, short sellers scramble to cover their short positions, creating a self-reinforcing upward price movement. The company's stock promotion efforts have also contributed to its recent performance. Now, we've also got to talk about the company's stock promotion, which has clearly contributed to its price performance. Hypercharge enlisted Gold Standard Media for a $300,000 digital awareness program, which appears to be extremely successful in generating interest in the stock. One of the consultants, Morris Invest, received $30,000 for sponsoring a YouTube video that's garnered over 7 million views since April 2nd. In this video, Morris makes bold claims like the stock is going to explode, a statement that most promoters would avoid due to fear of regulatory repercussions.
Now I want to tell you about today's sponsor for today's video, which is tied directly to these government grants for electric vehicles in the United States. This is one of those companies, guys, that in my opinion is about to explode in value. This little company out of Canada is called Hypercharge. Now they just raised millions of dollars and they're about to expand its production of electric vehicle charging stations dramatically.
Additionally, we found a TikTok video featuring an AI-generated individual recommending people purchase Hypercharge's stock. This is another unusual tactic for digital marketers to employ, given the potential regulatory issues.
AI-powered stock recommendation, Hypercharge Networks saw a huge increase. Our recent tip Hypercharge Networks Corp, ticker HC, trading on the NEO exchange increased by over 100% in days.
In response to the stock market promotion activities, the OTC markets requested that Hypercharge issue a statement addressing the activity in the stock, which they complied and put out a statement on. We haven't heard anything about that since. Okay, so I want to wrap it up from here. In the world of the stock market, you'll find a diverse array of investment opportunities. On one end of the spectrum, you have your safe, reliable stocks that generate cash flow and have a proven track record of success. On the other hand, there are riskier stocks that might be bleeding money, but have managed to pique the interest of traders and investors who believe in the company's potential to strike gold in the future. As someone once wisely told me, there's a difference between investing and taking a trip to the casino. Investing in pre-revenue microcaps is more like gambling than investing, but as we've seen with stocks like Tilray and FaceDrive, short squeezes can turn unexpected stocks into a 10-bagger, even if the fundamentals don't line up. Hypercharge has been the talk of the town in the Canadian junior market scene for the last few weeks, with its stock performance surpassing even the wildest of expectations. And at this point, it's clear that the company's going to need to continue raising funds to execute on its ambitious plans. However, when there's so much interest in a stock, that problem becomes easier to solve. The real question is whether Hypercharge can maintain the hype surrounding its stock and keep raising money at higher priced financings. Well, we can't predict the future. One thing is certain. Hypercharge has managed to capture the attention and imagination of the Canadian small cap trader. But I'll remind you, we've seen this story before. Let's just hope it doesn't end like it does 99% of the time. All right, everybody, thank you so much for watching. If you could do me a big favor, please hit that like button, subscribe, and ring that notification bell. Also, let me know what you think in the comments section. I love you all.